Welcome back, traders. Happy to have you here today. In this short video, I will show you how to apply the best Ichimoku cloud strategy for day trading in the Forex market. Ichimoku is an indicator that gauges future price momentum and determines future areas of support and resistance. This makes the indicator an essential 3-in-1 trading tool for day trading in the market. Before I proceed to show you how this indicator works, this indicator is designed to trade trending bullish or bearish markets. It's advisable you avoid using this indicator to trade in a weak trend or in a ranging market. So let's check on the parameters of this indicator. As we can see, the Ichimoku cloud indicator consists of 5 main components, which are Tenkan Sen line, also called the conversion line, represents the midpoint of the last 9 candlesticks. This is the blue line. Kijun Sen line, also called the baseline, represents the midpoint of the last 26 candlesticks. This is the wine line. Chiyu span, also called the lagging span, lags behind the price. This is the deep green line. Senku span A, also called the lead 1, represents one of the 2 cloud boundaries, and it's the midpoint between the conversion line and the baseline. This is the light green line and green cloud zone. Senku span B, also called the lead 2, represents the second cloud boundaries, and it's the midpoint of the last 52 price bars. This is the red line and red cloud zone. Traders can modify the colors of the lines to suit their preferred color of interest. You can also increase the opacity of the color 0 and color 1 settings to reveal the cloud of the indicator. Just make sure the cloud are not too deep so you can see the informations of the candlesticks and other lines of the indicator. There are 2 ways to execute trade setups with this indicator, and they are: Number 1, through the conversion and baseline crossover strategy. Number 2, and through the lead 1 and lead 2 cloud strategy. The next step is to search for a bullish or bearish trending market. As we can see on this chart here, the market was on a bullish trend. Let's utilize the conversion and baseline crossover strategy. So what is the usefulness of the conversion and baselines? Number 1, as we can see on this chart, the conversion and baseline act as support or resistance during trends, just like moving averages. Number 2, the conversion line cross over above the baseline signifies a change of trend into a bullish phase. Also, the crossover of the lead span A above lead span B signifies a bullish trend. This situation produces a green cloud. Number 3, while the conversion line cross over below the baseline signifies a change of trend into a bearish phase. Also, the crossover of the lead span A below the lead span B signifies a bearish trending market. This situation produces a red cloud. Whenever the conversion and baseline crossover occurs, it signifies the change of direction of momentum. The distance between the conversion line and the baseline signifies the strength of momentum. As we can see on this chart, whenever the indicator's line is tight close to each other, it signifies a ranging market. A cross of the 2 lines confirms the change of momentum. And whenever the lines are far away from each other, it signifies a strong buildup of momentum. Likewise, the far away of price from the line shows the strength of the momentum of price movement. Execute buy position when price is above the 2 lines, and sell position when the price is below the 2 lines. To take the reversal of a bearish trend through the implementation of the Ichimoku indicator, We need to figure out the crossover of the conversion line above the baseline in combination with price crossover above the red cloud of the indicator. Whenever this occurs, it signals confirmation of change of a trend. Likewise, to take the reversal of a bullish trend through the implementation of the Ichimoku indicator, we need to figure out the crossover of the conversion line below the baseline in combination with price crossover below the green cloud of the indicator. In order to practicalize how this crossover works, let's search for a trending market. Okay, here's a great example of a potential bearish reversal trend into a bullish rally setup. We can see the crossover of the conversion line above the baseline here. Price later trade above the red cloud indicator. This setup is a signal of a bearish change into a bullish phase. So let's execute a buy order here. Our stop loss can be placed below the low of the crossover of the conversion and baseline here. As a day trader, we can target 3 risk-reward ratios. Let's see how the trade goes. Okay, good. The bulls moved price higher. We can see more buyers coming in. We can see how the conversion and baseline acted as support for price here. Also, here, it acted for support for price in this bullish trend. Our take profit hit. This is how to trade the reversal of a bearish trend into a bullish trend with the Ichimoku cloud indicator. Now let's search for how to implement the Ichimoku indicator for a bearish trade setup. Here in this bullish trend, we can see how the conversion line cross over below the baseline here. Also, the crossover of price below the Ichimoku cloud confirmed the bearish setup. Stop loss can be placed above the conversion line here. As a day trader, we can target 2 or 3 risk-reward ratios. Let's make a sell entry here. Price moved upward. Let's wait to see if the market will prove our analysis wrong. The market transformed into a consolidation phase. Let's exercise some patience. If the market should hit our stop loss, then we move to the next trading opportunity. Okay, the bears set in now. The bears pull price downward. Consolidation phase again. What an aggressive bearish move downward. The bears continued the rally. Our take profit hit. This is how to detect a bearish setup with the Ichimoku cloud indicator. You can also use this indicator for the continuation of a bullish trend through the crossover of the conversion line above the baseline after a bearish pullback in a bullish trend. Likewise, for the continuation of a bearish trend through the crossover of the conversion line below the baseline after a bullish pullback in a bearish trend. The Ichimoku cloud indicator trading strategy is one of the easiest trading strategies for day traders because it helps to detect fast-yielding profitable setup.